You only see me full screen when I don't have the PowerPoint up. So you should see my picture on the corner and the PowerPoint slides that we'll go through. You do have controls on your screen, like how you want those, how big you want me and how big you want the screen for the PowerPoints. Should be able to see both right now. All right, I've got 1 more minute and we'll get going here. Hopefully I'm loud enough. I think I've got good sound here. I'm in a big room, so hopefully you'll hear me fine. I just posted a link to well, it's kind of mixed up in two things. I'll try again here a little bit later. We'll type here, we'll do it again. That's a little better. That's the link to the PowerPoints. So I'll do it again a couple times this morning. So if someone wants to follow up with a look at the PowerPoints later, they're a PDF file on that link. So we'll show you that a little more later. All right. Well, I have 10 o'clock and a little after. We've got about half people signed up online, but hopefully more will start joining as we go. If you have questions, you can put them in the chat box, or that's where I'll look most often. Hopefully right now you'll see my screen and you'll see me in a little picture. You can change your viewpoints on how you look at me from that way. This is part of a 4 series on Wednesdays. We're going to have next 4 Wednesdays. We're going to have probably an hour and a half, 2-hour session. First one's on goals and assembling your team. Second one will be a week from today, looking at all things tax, gifting, selling, and transferring. The third session is on wills, trusts, and ownership titling. What's it all mean? And the last session on January 25th, we'll put it all together for state, retirement, and healthcare and business planning. So again, I'm David Bow. I've been doing these workshops for probably close to 20 years now. And I'm based in Southwest Minnesota. We've got a lovely day down here. I'd say over the weekend, we've got 16 inches of snow that I moved this morning to get out with big drifts. So I just moved enough snow to get out this morning. All right. So we're going to start talking about developing your goals. I already have a question in chat. So let's just look here. Somebody wants a link. I'll put it on there again here, and I'll put it here as we go. I'll repost it, but I'll put it in here again, and you can see it. But I'll do it as more people come online. It's in the chat box, the link that I just posted for you to find the PowerPoints later. So if you go to chat box, you can see the link. All right, good question. So developing your goals in the farm transfer process, that's what we really want you to focus on. What are your goals? What do you want to accomplish with this whole process? Do you want to see your farm continue as a farm? Do you want to see your land continue on as a legacy for the many generations, for your heritage, for the next generations? Karen, you didn't see the link yet, huh? Let's see. Okay, I'll try again here. It said, now I pull up everyone. All right. Now you should see it. There you go. To everyone. There's a chat. Sorry about that. Now you should be able to see it. All right. Okay. So anyway, in the farm transfer process, developing your goals is really fundamental to succeeding in the process. What do you want to see happen with your assets, your farm? What do you want to see the future happen? So we're going to talk about developing your goals. So having a transition and estate goals and being able to communicate those goals with your family can help alleviate some apprehension that surrounds the estate and transition planning. So again, if you have your goals established, you share at some meetings what you want to accomplish with those goals and why the goals up, it'll help everybody in the process figure out what you want to accomplish and help you along that process. All the farms are not the same. These materials may not apply directly to you. I have one person that has farm or timber issues and wants to talk about that. I think is on the webinar today. So, but all the farms are different. Some have livestock, some just have cropland. Like I said, some are viable to be a viable farm for many, many generations. And some are going to either be a hobby farm or a pastime for the people that like to keep farming in their later years in life. Some people come back to farming later on. I had a person retired. When mom and dad passed the asset on to them, they came back and started farming again. So again, all the farms are not the same, but then all these issues we talk about today might apply directly to you. Let's get started. It's a nice pathy road, pretty country to travel down the road to get a path where we want to go. So succession involves transferring the operation business, not just assets. So how are you going to transfer the control and operation of your business? Who gets the final say? Who gets the more say in the operation? The transfer planning is additional process beyond estate planning. So estate planning is a material, but transfer planning is how are you going to accomplish that? Both transition and estate planning involves questions, and we'll talk about fair versus equal in your family dynamics. So the farm transfer, you're really doing business management transfer. Who's going to take care of labor? Who's going to have how the income going to be adjusted? Who's going to control the farm assets? There's lots to consider in this process on the farm transfer. And then the farm personal estate, well, a lot of your assets, even if you're in a partnership or corporation, there's still some assets held, even farm assets are owned personally, and they're often included those farm assets. So how are you going to take care of your personal assets? And who gets to decide? Who makes the final goals? So we're going to give you lots of examples this morning, and we're going to encourage you to go through the process with all your family members. We have another program that's kind of a retreat for families to get multi-generation together to work on these goals and figure out what's the proper way to proceed with the farm. But again, who makes the final goals is kind of who controls the assets. So oftentimes the older generation has built up this wealth of this pile of gold or assets, and they're the ones that are kind of in charge of how they're going to distribute those assets. So generation one, like the parents or the grandparents, typically have that gold pile. And with that great power comes great responsibility. They need to figure out what they want to accomplish and try to communicate that for their family's best interest. So I got a poll pause here, just something for you to think about. I want everybody to think about for a second. Have you started writing down your transition goals? Hopefully you have. Even one goal is a place to start. How do you want to accomplish? And maybe it's as simple as how are you going to transfer the land? How are you going to transfer the equipment? How are you going to transfer livestock? If you haven't, maybe it might be in that case. I have some farmers that don't want to deal with it. They can deal with it after I die, is what they'll say. I had several farms that I worked as a loan officer for 9 years, and I had 2 farmers die in the dairy barn as they're still doing chores on a daily basis in their retirement years. Or no, I've been thinking about it, but I haven't really done anything. That could be where you're at too in that process. But hopefully you're able to start the process, and hopefully we'll start your day thinking more about getting a yes down and writing some goals down. So what are some common goals? Well, oftentimes we talk about tax issues. You want to reduce the tax implications, either estate taxes or income taxes, how you transfer the assets. You want to protect the assets from liability and lawsuits. You want to ensure the farm continues next generation. That's really a number one goal. A lot of people, they want to make sure that farm continues. You also, as a retiring generation, want to have retirement income available for yourself, and you want to avoid family discord. So, and you all be happy. We'll talk more about that. But avoid family discord is a challenge too, and hopefully good communications, that'll help you avoid some of those family discords. So be happy. That's a really broad range goal, but hopefully you can accomplish that. You want to be happy in your retirement years. You want to be happy with your choices you make. And you want to be happy with that transition plan. We're going to talk about SMART goals. And SMART goals is kind of an academic term, but basically it stands for specific, measurable, attainable, relevant, and time-based. And so they're all very important in the goal process. You want to be specific. In other words, I could say I want to transfer this in and be done with it in 5 years. Well, that's a timeline. Well, what do we want to have done in 5 years? I want to be measurable. So I want to be able to accomplish these things in a reasonable and measurable timeline and attainable. Sometimes we have goals that aren't even attainable and they must be relevant to our situation. So there's all these SMART goals come into play in your situation. Have you ever used a SMART goal before? Hopefully you have. We did this workshop before without the SMART goal issues, but we kind of did the same process. We went through the same steps, the same processes. And so you might not have to think about SMART goals, but you've probably been using them. And yes, but I'm not convinced they're helpful. Again, that's what you have to think about. But all 5 of these things will be important in your process. And one more question in the chat box. Oh, there, she's used SMART goals. Good. All right. So identifying your goals. Goals are statements of where you've been, where are you, and where you want to go, how you intend to get there, and when do you intend to arrive. So where do you want to go with this process? Like I said earlier, some farmers do not want to deal with this issue. It's just something they don't want to. Some farmers will say, I just want them to fight. They can fight after I die. Other farmers want to make a plan. They want to help their family farming heirs make it smooth and transitional. So they get to where they want to go. How they're going to get there is what they want to work on. How they intend to get there and when. That's really important. When do you intend to arrive? Timeline is also really important in this process. Okay. All right. SMART goals. We'll talk more about SMART goals as we go forward again. But if somebody wants to know the SMART goals, we can show them again back up here again. So they're specific, they're measurable, attainable, relevant, and time-based. Okay. So reasons for writing goals. And we've done these sessions for a lot of times, and I always encourage people to write their goals down, or anything you're working on, write it down. I've got a bunch of notes here from my calls I made yesterday, just from yesterday's calls I returned. But by writing things down, it's going to give me something that I'm going to keep working on. It's in front of me. If I have a thought one day, and I think that would be a good thing to work on, but I don't write it down, it might not even give that attention it needs. So writing it down gives it more authority, reminds us of them, so we see it. It clarifies them for writing our goals down for everyone to know. Provides a written record. On January 4th today, we decided we wanted to do this as a goal and want to work towards that goal. Provides a record of that timeline and increases the probability of achievement by writing it down. So length of goals, another challenge. Short-term goals, I want to accomplish the next 2 years or less. Long-term goals, up to 5 to 10 years from now or more. So you got these short-term goals that I can really work on today and accomplish quickly. And we have long-term goals that can take longer time, and I'm going to do it gradually. Some things like manage your income tax benefits or impact your accounts of both farmer and the next generation farmer require a longer timeline to make those tax burdens less. But these are simple guidelines. Sometimes you can move through these goals quicker than others. So good goals. Highlight a point in time. So you set a goal on when do I want to do it? Within 2 months, within 5 years. If I did a goals worksheet, we're going to talk about this a little bit later, but if I did a goal worksheet today, I'd have a lot of things on my goal list, but I get overwhelmed. Then I start listing times I want to accomplish different goals, and it helps me to accomplish them. Use action verbs. So I have an action in those goals. I want to reduce, increase, improve, expand, or transfer is all action goals. Okay. Identify change, pesticide applied, yield, attitude. All these things are identified change in those kind of different things. And so specify how it's measured. Are we going to try to increase our farm yields? Are we going to try and increase our livestock production efficiencies? Are we going to benefit our balance sheets? What are we going to work on for how it's going to be measured for those goals? Again, those SMART goals, specific, measurable, attainable, and relevant and time-based. So again, I could be a dreamer. I have different 3 kids, and one's really a dreamer. And I would say a lot of times his goals aren't attainable, necessarily aren't always relevant. They're very not specific, and they're hard to measure. And oftentimes he has no time base to them. So again, if you try to get him back to the ground and took these SMART goals to applications, it might get him back to where he could accomplish some goals. Some common goals that every farmer might have is reduce their tax implications. Again, There's estate taxes out there. There's we're going to talk later sessions. There's income tax benefits and where you can reduce that. You also want to protect the assets from liabilities and lawsuits. Also, you might have, if you transfer the assets now and your children could get divorced, they could get in an accident. There's all kinds of things that could happen that could put those assets in jeopardy. You want to ensure your farm continues next generation is your common goal. Have a retirement income. Oftentimes, I used to be that banker and we do FinLurbs and look at the numbers, and oftentimes that bottom number wasn't big enough for two families to be happy. So again, you want to make sure you have enough retirement income, live a life you want to live in retirement, which is part of being happy in your retirement years. So a common retirement goal is to be happy. Well, that's kind of a challenging goal. And one of my coworkers really focused on this goal. But again, you want to be happy in all your days. And if you want to continue farming, that makes you happy, you can do that. But you have to think about, as you continue farming up until the day you die, how are you going to transfer those different things, management, assets, those things, so that the farming year can succeed. I've had examples through all these workshops over 20 years. I've had 77-year-old gentlemen who worked for mom and dad all his life and never had any farm assets. Never was assured anything. And when dad died, mom gave the assets to everybody. So the farming year, who thought he was a farming year, had been farming with mom and dad, had a different outlook when mom and dad died, when dad died. So you want to be happy, so you want to control your own destiny if you can somehow in this process, and have communication of what you want to accomplish. So here's a SMART goal. During 2021, or whatever year, this is my old goal, but again, we hopefully accomplished this 2 years ago. We set aside $10,000 from asset sales for vacation during retirement years, and take at least 1 week long vacation as a couple during 2021. Did you do that? That was a SMART goal. So in order to do that, you had to set aside $10,000 of your regular cash flow. It wasn't going to go back into the farm, buy new farm assets. It was going to be set aside for vacation. And if you're a livestock producer, you also had to try to manage the livestock to be transferred, or management to be transferred, so you could be gone for at least a week and not have to worry about what happens to livestock. So that's something to think about as a SMART goal. How about long-term goals? Think about your long-term goals and then identify some short-term goals that will help you achieve your long-term goals. Again, they work together. So we have 3 goals worksheets that we've had in these workshops for many years. They're developed to help you develop your goals in a goals process. The first goal worksheet is number 1. Everybody, you make copies of the goals worksheets, and everybody does it by themselves. Individual goals. What do I want to accomplish? What does my spouse want to accomplish? What do my parents want to accomplish? What do our children want to accomplish? And what do our grandchildren want to accomplish? If they're old enough to do this, you can include in the process, give everybody an individual goals worksheet and work on the individual goals. The second worksheet is for blending goals in generations. So the second worksheet, my wife had her goals worksheet, I had my goals worksheet. We try to blend them together and then prioritize our goals as a couple. And the third worksheet is to bring all the generation goals together and figure out priorities for the whole farm. Okay, everybody's goals included. So number 1 goal worksheet is begin to write your SMART goals as an individual. Brainstorm your family, personal, farm care, retirement, personal goals for less than 5 years or more, or 2 years or less. And enter them in these columns. Long-term goals. What do you want for yourself, your family? What do you want for the farm? What do you want for your career? And what do you want for your retirement lifestyle? You want to stay involved in the farm? Do you want to step away? It's really hard to step away. So again, what are your goals? Short term, what do you want to do? You want to save that vacation money that we just talked about? Do you want to stay involved? Do you want to make sure you have a lifestyle that you can do what you want? My in-laws are farmers, and we used to always say they had to have some money outside the farm. It was their money to do whatever they want to do, so they would have the flexibility to do what they want to do when they want to do it. And it wasn't dependent on how the farm did. Some years the farmers make lots of money. Some years the farmers are pretty tight in margins. So again, if you have a pool of money outside the farm already set up for your retirement, that gives you a lot of flexibility. So again, those could be short-term goals. They could be long-term goals. Think about those for individually. Again, the second worksheet, you blend the goals together as a couple. And so sit down together, husband and wife, and you figure out what your goals are as a couple and rank them top to bottom. What's the one you both agree upon is the most important for your farm situation? And again, multi-generation will do it. Grandma and grandpa will do it, mom and dad, kids will do it, and the grandkids might do it. Again, think about what's their highest priorities. And then the third worksheet, you get everybody's goals together. You're gonna have a lot of goals. And remember, it's a starting point for all the farm families work together to figure out what they can do for the family, farm business, and retirement goals. Some might be the same on all those goals worksheets. So again, it'll kind of get an idea of where everybody's coming from. So examples, retiring generation goes to buy a house in town by January 21, or by a year ago. Use revenue from selling their intermediate assets and coming to the farming generation. So they're going to sell maybe the equipment or some of the equipment to the next generation of farmers, and they're going to use that revenue from that sale of equipment to buy the house in town. So they accomplished that a year ago. Retiring generation is going to buy life insurance policies of X amount of dollars. And again, that varies for everybody. By June 1st of 22 last year, they would have got it done for the non-farming children's inheritance. So life insurance is not cheap, but is a tool that can be used to, we have to talk about the fair versus equal number again, but sometimes farmers want to do everything, the farming generation, sometimes they want to do everything equally. So again, if it's hard to make that number equal to what the farm values are today with our high price of land values. But again, those things are steps you can take. One spouse can maintain off-farm employment. That's really important until you turn 65. Then you can go on Medicare. It's really important to have that health insurance. It's very expensive for farm families. And if that spouse maintains off-farm employment, that can really help the cash flows retiring generation. It can really help with their income for the next 2 years. So again, that can help the senior generation before they totally retire. Next generation is going to maybe buy a combine, tractor, and grain cart from the parents. And then by July 1st, they get it appraised, equipment, and apply for FSA direct and operating loan. So these are steps that you can take in the process. So a timeline on these goals have all been accomplished. So again, they're pretty good goals to think about. Coordinating transfer goals to your state goals. So successful plans consider both to make sure the transfer and state plans coordinate among the generations within the farm. So again, the transfer plan, how are we going to accomplish that, and the estate plan. So if you have to decide if they're working together very well, or if you're willing to turn over some management before you actually turn over the assets, or can you afford to turn over some of the assets? You have to decide those different steps along the way and communicate that between generations. All right, so should all the heirs to share in the business asset ownership? So how should the heirs share it? How do they get their piece of the pie? Is it done through gifting? You can gift a lot of money as a couple to individuals, and you give to their spouses, or by sales or inheritance. Those kind of things you can list in your wills and your trust, how it's going to be passed on next generation. How's the income going to be distributed? Is it going to be all income, land income? What's going to be staged for the retirement generation? What's going to be generated for the next generation? That business management, again, it's really hard for the farming generation to give up control sometimes. So who's going to transfer that management? What are you going to let them take control of, so that you can? I had a boss one time who told me he was going to let me give me enough rope till I hung myself. The same thing if mom and dad are around to watch next generation start farming, they're around to help. They're not around to hinder. Although sometimes generation doesn't see it that way, but it helps transfer that management skills. They've had a lot more experience in how things might work out. And is everyone involved in the farm? That's the next question. All your kids involved? Are they not involved? Some want to come back who aren't involved? You have to think about those questions as you're doing your goals. Another example of goals exercise. So I've got a list here of goals. Just take a piece of paper out and think about these things. I'm going to give you 2 minutes. Write a short-term personal goal for yourself, a long-term personal goal. Some of you are going to do in the next 5-10 years, short-term goal, 2 years or less. Write a short-term farm goal. What do you want to accomplish next 2 years of that farm? What's the long-term farm goal you want to accomplish? What's a miscellaneous goal? We're all on first of the year, we're all on health goals, right? But you can do whatever goal you want there. Favorite non-farm thing to do. What's your favorite hobby? You want to make sure you accomplish that this year, or how you want to attack that. Maybe you want to do it once a week, maybe once a month, whatever you want to do. Favorite things to eat. There's another example of goals exercise. You need to start thinking about goals. Someone you do not see often, but you want to, right? That's a goal. I want to see my old classmate, or I want to see my aunt or uncle. I want to see my parents more often, because maybe I'm the non-farming area that's far away. Maybe I dream of a place to visit. I'm going to put that down as a goal. I want to go to Hawaii sometime, or I want to go on the trade across Canada. I don't know. Build or buy wish. So then you get that list together. What do I want to buy? Maybe I want to buy a snow house, home in Arizona or Texas or Florida. Maybe I want to skateboard nice winter we've had so far this winter. Or maybe I want to build my home right on the farm or close by the farm so I can still stay involved in the farm. Those are all things that you can put down your goals. So again, I'm going to give you another minute here. Just think about those different goals and write down one of those for yourself. All right. All right. So working through the goal setting process. So you start as an individual. That's where you start doing your individual goals. And you start with a couple, get together and try to bind your goals. Sometimes husband and wife are very similar. Sometimes they're very different. So again, hopefully you'll come out with a list of goals as a couple. You regroup as a farm family or farm partners for multiple generations. Whatever this means for your operation, you regroup as a family, farm family, and again, start working on the goals. Then you identify goals or statements that the whole team can support. So some things on those goal worksheets are going to maybe conflict multi-generation between each other. But again, if you identify statements that everybody agrees upon, that's a positive thing that you can start thinking that's a goal we can all work on. Discuss. Again, share your goals, discuss, create united preferences and goal statements for the whole operation, and record one mutually agreed upon group copy for all farm parties. So again, you're going to have the high priority goals that everybody agreed upon, and you're going to kind of rank them and list them as an order, but you record at least one that's mutually agreed upon for all farm families, and you're going to copy it so that everybody can see it. What's the goals we're all working for? Okay. Some house rules for writing goals. Again, be open and honest with each other. Resist temptations to make value judgments about each other's statements. So it's really easy to get in arguments and, oh, that's not true. I'd be fair, be honest, just let them make their statements. Try to refrain from reacting until the other person has fully expressed his or her ideas and their point of view. And then again, go back to working on the goals and playing the goals. Don't take it personally. Don't attack the personalities, but just work on the goals that everybody shared. Okay. Silence. Another final rule is if you don't say anything, you're basically accepting what everybody else is saying. So when you have these goals workshops and you get together and you talk about goals, husband and wife, multi-generations, if you don't say a word during those workshops or those sessions, you are accepting what's going on. So this is your chance to give your input. So try not to be too quiet if you have something to say. Keeping the holidays happy. This is another challenge. So again, we used to always recommend maybe the holidays were a good time to do it, but one of my coworkers said, well, we want to keep the holidays happy and don't talk about these issues. So meeting around the kitchen table, especially during a meal or worse yet, the holiday, may not be an ideal situation for discussion about the business. But a lot of times, as we get close to retirement, our kids are all over the place, especially in farm country. A lot of our non-farming areas move away and quite far away. So maybe the holidays are one of the few times they're all together that makes it available to do the process. So again, it's your choice. But again, we encourage you to have that discussion with all your family members. All right, so we've talked a little about SMART goals. I'll give you some examples. You think these steps, ideas can help you write goals? Yes, no, maybe. What do you think? Hopefully they'll give you start thinking about the process. They'll give you a chance to write some goals and answer some questions. And some people already have said, absolutely, I think it's going to help them. So we're doing good so far. So again, think about your goals. I want you to think about it. That's the whole purpose of the day is your goals. Ideally, you come out with this session with what do you want to accomplish individually. Can you take a moment right now and write down an individual goal or two for yourself? So again, I have a whole list of other examples. Right now, just give me a different way of looking at it. So we always want you to pause, and our accomplishment of this first session is for you to have goals. When you think about when you leave today, you've got some goals. So again, I had to write down all different goals, but right now, put down that initial goal or two. that you think are really important for you, and write those down. Okay. All right. So we've got these 3 goals worksheets. I did not post them online. I think they might be part of our, you can find them on the estate planning transfer website, but I'll make sure they're posted. These 3 worksheets for individual generations in farming, but put a timeline. Have these SMART goals. Again, having a timeline. I can think these are great ideas and great functions, but if I don't put a timeline down of when I accomplish them, they probably won't get accomplished. So think about when you want to have individual goals accomplished, when you want to have that multi-generation meetings between couples, and then everybody together. So you got 3 different times. The first 2 can be, different dates, or they can be the same date when you actually spend some time individually and then get together with couples and figure it out together. And then the last one's going to be, when can I get everybody together to have a powwow and discuss farming goals? Remember, brainstorming is okay. So again, you can throw out lots of ideas, and we don't have to all agree upon, but we're just throwing out ideas in this goals worksheet time. So creating your farm team. This is what we really want you to do. I would tell you again that we're not giving you legal counsel. We're not giving you any attorney advice or anything. We're just kind of giving an overview of these issues. And we want you to get those professionals involved. So we talk about assembling your transfer and estate planning team. And it may include your accountants, your attorneys, your financial planners, your adult farm management instructor, your bankers, your insurance agents. Get that team together. But in order to get that team working for you, you have to get your goals together. What do you want that team to accomplish? And then get them working on that goals that you've written them down as a goal for the whole farm. All exiting and entering farm business parties need to be involved in the process. Again, they work together and get this goals list you want to accomplish, and then take that to your professional team and how can they help you accomplish it. Again, the non-farm heirs need to be included and informed at some point in the process, so they're aware what your goals are, why you're doing your goals, and how you're going to accomplish them. So again, create that farm transfer team. That's very important in this process. Finding estate and transition attorneys. Many law firms in Greater Minnesota have estate planning divisions, so you can find those people that are specialized in estate planning. Ask your CPA or tax preparer if they have ideas of who might be a local expert they work with. A lot of times these attorneys and CPAs will get together and work together along with the insurance agents and your bankers. They'll all work together and they're very comfortable with each other. And there are more and more getting together as groups like this and putting this team together for you. So if you're comfortable, ask fellow farmers for recommendations and who they used, how they use it, what they felt about that person or that team they've organized, and how they thought, how they're doing with these goals and their process. Knowledge of the complexity of farming in addition to the state law is beneficial. So again, you want to have somebody with a farm knowledge base, not just doing the paperwork. Okay. So be a good consumer of legal and financial advice. Legal services are a must in this process. And again, you have to have your goals. We're going to talk in later sessions about trusts, wills, and the attorneys usually specialize. Either they're really good at trusts or they're really good at using wills. They oftentimes don't do both. So again, you have to decide what you want to accomplish. And oftentimes you can interview those attorneys, what do they usually use? And make sure they're accomplishing what you want to do, and not letting them drive you to, if you want to do a will and they're already a trust attorney, well, don't let them drive you to that trust. If you want to do a trust, they don't do wills. Well, that's what I'm talking about. Use their legal services and they'll help you get your goals accomplished. Careful tax planning is also involved. So you want a skilled tax professional, help you avoid mistakes that are going to cause you a tax bite, and that farm transition estate planning mistakes will be avoided, hopefully, if you have that good tax planner along with this process. Again, communication and wishes with families, very important. Focus on the goals that you want to accomplish, and then first communicate with your spouse and talk about that, negotiate whether you've got that right, or they could maybe change your list a little better. Then your farm family members and include them in the process. Then go out once you get those goals established, communicate that with a team of professionals. They're going to help you accomplish those goals. And then make sure you communicate with non-farming family members as well. focus on the goals, and then not everyone may need to hear the same things. Not everyone needs to see your financials, but there are people that will need that, and know how you're going to transfer those assets. But you want to make sure you have your financials organized. You have a very complete listing of your assets. We always encourage you to have a balance sheet. Oftentimes we encourage that balance sheet should also have the cost basis, including everything you own. So if you decide to sell it, you decide to transfer it, you decide to gift it, what's the tax consequence of that? So again, but you can share that as much as you want. And then the community on farm family members and area on the side inclusion may help everybody present challenges later. So again, if you don't communicate with non-farming heirs and they come to that family meeting after you die and they say, oh, what's going on? Okay, I've got a question here about if I have a will, I not want to also have a trust. I'm just saying, my point was about attorneys. Some attorneys are very specific. They like to have trusts, and some attorneys really work with wills. You can have both the trust and a will. People have both, different purposes for both. They have whatever the tense they want. So I'm not saying you can't have a trust and a will. The trust might have an intent purpose for that trust, setting up separately. Your will is going to be probated. We'll talk about that more, the consequences, the decisions of making those choices. But I wasn't saying you couldn't have both. But we'll talk more about why you would want to have both. And usually you probably have one or the other. But for some reason, you might want to have a separate trust over here to protect certain assets. But again, that was a question posted. So keep asking your questions. So again, we're encouraging communication, because if I know my wife's got 6 siblings in her family, and they've already kind of done if they've got a farming heir and they've done their estate planning, but we know it's mom and dad's wishes. And that's going to really prevent the non-farming heirs having an issue with the farming heir. So it's really important. Sometimes that communication really helps. All right. So again, the foundation of preparation with your team, get those goals together, prioritize them for yourself, your family, your whole farm operation. Process results should provide you a complete transition to farm business. What's your timeline? How long do you want to accomplish it? You have certain things you might want to accomplish next 2 years, and some you want to have 10 years or more. Again, it's up to you how you want to accomplish it. We talk about gifting, you're limited in levels on gifting. We'll talk more about in the gifting day, but you could gift a small fraction of land every year if you wanted to your heirs. So it'd take a lot of years to get all land transferred. But again, it's up to you what your goals are and what you want to accomplish. So as the goals, business, family circumstances, or retirement change, these plans can change too. Sometimes a grandchild comes involved. Sometimes a spouse, a farming heir gets married or gets divorced. Those things are all going to come into play. How do you want to treat them? You can do all that in this planning process. It's okay to start with the low-hanging fruit. So think about the simple things that you want to accomplish and can accomplish. Start small if you can. It'll help you in the process. So I'm going to start really small in this process, and I'm going to accomplish that goal. It doesn't have to be the whole tree. It doesn't have to be all the apples. It's just something I can get accomplished, and I can start feeling good and start that process going forward. Okay. Remember, this is not legal, financial, or tax advice. We want you to see your team for these issues. So again, but you want to start with an overview. If you attend the next 4 sessions, you'll get an overview of those issues. And then you go see the team. And with your goals in hand and the ranking of your goals in hand, you're going to stay focused on the top one, but maybe the top one is really a big goal, like transferring a farm. Well, that may take several years. It may take transferring a farm may include the business transition. How are you going to transfer the livestock operation? How are you going to start transfer management of the cropping operation? All those things may take time, but you'll get your goals together and your listing of priorities, and then go see your team. And they'll help you with the legal process, help you with financial issues. Is there going to be enough cash flow for you and the next generation? And they'll give you tax advices for that process too, how it'll work. But see your team for these issues. I have a short session today on goals, but again, I just want to do an overview about that. So this is my cell phone and my email address. So if you want more information about this, or there's the website for farm transition, and my cohort, Nathan Linsky, is at a meeting in Omaha today, or he'll be on some of the future sessions, or he'll be on here today. So you can contact either one of us in the future. You can also basically put any questions you might have in the chat box. We're kind of coming to the end of the session. It's goals. I'm not saying I'm not necessarily minimizing goals, but I tell you they're very important. This is a starting block. So just take a sheet of paper out today. I'll make sure those worksheets are on that transition website. I think they are though, the goals 1, 2, and 3 worksheets, and you can look at those as well. So write down that Z link there for the farm transition. Again, if you want contact information, those are our cell phone numbers. I encourage you to follow up with us if you'd like. And again, this is the first session. Next week, we'll talk about tax, gifting, selling, and transferring those assets. So talk about the tax consequences about doing those things. The next week, we'll talk about wills, trusts, ownership, title. How you title the property is really important in the process because that takes first priority. No matter what kind of trust or wills you have, the titling of the property will take first control of the issue. And so we'll talk about those things as well. What's the difference between a trust and a will? And then putting the basics together, putting all these different issues together and having a solid plan. So again, that's our website. That's what I've got for you today. I'm going to pull the chat box up and I'm going to answer your questions if I can. This one was only about 40 minutes. Some will be a little longer because we'll have a little more tax issues and I'll go a little more about examples. I could have given you lots more examples, but like I said, everybody's situation is different. So if you have questions that might relate to your situation, I would be glad to give you examples that way. This will be the shortest session of, I think, of the 4, because it's really about goals and that SMART goal slide. The 3 worksheets will help you accomplish those goals. So that's why it's kind of a shorter one. I've got the recording on, and when I get them done, I will post them as well, probably to that transition website, so you can see the posting of these workshops also there down the road. They probably will post it for a week or so, but we'll get them going as we record. This is being recorded so I can get that accomplished. So any other questions? And you can share the recording with other family members. You betcha. I encourage you to think about this process, and it's a very complicated process. So a question is about how might forestry and CRP programs fit in the transition planning? Well, obviously forestry is a long-term, when you have a forest woods lot, there's a long-term timeline to that when you're gonna get benefit or payout. So you have to think about how that's going to pay back to your business. When they're actually what's the goal of that? When it's going to be logged? What are you trying to grow on that wood lot? Those kind of things. The CRP program is a 10 to 15-year contract. That's in place. You can break the contract, but most time that can be passed through the generations through your transition plan. So both of those things could be discussed. Like if I have a wood lot that I'm planning on harvesting in 10 years, I'm the older generation. Well, maybe I'm going to say I'll transfer the title of that property, but I want to get half the revenue off that wood lot, or maybe I want to get a fourth of it. Those are things you can do in your estate planning, transition planning. The CRP program, maybe that doesn't get changed out of my name, even though I transfer the land to your name. But maybe I'm still considered operating that farm. Those things can be discussed and changed. Okay. Let's see here. There's someone that said they were able to join because of the weather. And again, we have nice weather today. So again, these will be recorded later, and I'm going to post. They'll be posted. I'm recording them now. I'm going to record them later and post them online, so you can find them online. So again, if you look at our website, hopefully you can find these recorded sessions down the road. By February, first week in February, they should all be posted. Any other questions? You can't share the current recording right now, but again, it will be posted on our website, and then you can send your family members to that website. So details, who I need on my team is starting farmer into dad's operation. Who are the professions I should avoid using dad's guys? Okay, so you're the younger generation farmer and you want to get your team together. So your team is going to be your basically number one person is going to be your tax planner, your accountant, whoever that is, help you with the process. You're also looking at your banker is going to really help you figure out, can I afford to buy any of dad's operation? Can I afford to buy any assets of his to start getting some assets involved, that I start getting a cash flow for part of dad's operation other than a wage earner. You should get, the attorney is more for the title of the assets. So like if farmland's involved, if dad's gonna have a will or trust. As a younger generation, I wouldn't recommend you at least have a will if you have kids, because you want to decide who is going to be the take care of the kids if you die. If you're both you and your wife die in an accident, which can happen, by having a will, you can have who you want to see raise your kids. You can do a lot of control of the assets in your. You can put the assets in a trust for a while in your will until your kids become a certain age. There's all kinds of things you can do. So I would encourage you to talk with the attorney in the process as well. But your group's going to be different than your dad's. Transfer on death deeds is also brought up here, and we'll talk about that. Yes, there's lots of tools out there. Transferable on death deeds, transfer on death accounts. You put your names on the checking accounts, all different kinds of things. We'll talk briefly about those in the future sessions. So, any other questions? The transfer on death deeds really do oversee the will, oversee your trust, because it's going to be it's going to transfer death to whoever's listed on that deed. So I'll be here for at least till 11, for 15 minutes at least. So if you have any questions, you're welcome to ask them. Otherwise, hopefully you'll sign up again. This is, once you've got this link, it's really, you can sign up in the future and come in any sessions. So again, I encourage you to look at the next 3 sessions. And we'll go forward with that. Okay, we have a question in the chat box. An absent landowner in Nebraska. My goal is to get access to the capital in order to buy land in Minnesota. My son and daughter want to own the forest land in Minnesota to build on and harvest wood. So I'm exploring ways to exit corporation in Nebraska. So, yep, it's a challenge to, you have to figure out how you're going to get out of the corporation. If you have land and the assets of the corporation in your name, it's really hard to get that land out of the corporation. So really, as part of the corporation, you have shares, and whatever the shares are worth is your value on that corporation. You can try to get the land out and sell the land if you want to, or you can sell the land to your other parts of the corporation. So the forest land in Minnesota, once you accomplish getting the assets, you can buy the land, and then once you own that land in Minnesota, you have to set a plan how you want to transfer that to your son and daughter-in-law. Whether you want to have them do a contract for deed, whether you want to have a gift part of it over time. There's all kinds of ways to approach that. So again, our future sessions maybe help you with that process too, about ideas on how you're going to transfer that land. But the first part is the corporation. You have to decide how you're going to exit that. What your tax planner will be involved. What's that going to cost you on the gains of that tax the withdrawal from your basically your stock shares you're going to sell, and you've got to have a willing buyer. So that's like, that'll be determined by who's the other co-shares. All right. Question here is, should the transfer of assets always merely transfer to management? Assets are incrementally being transferred to next generation, but dad maintains 100% of farm management. That can very much be the case. You know, that you can do part of the management ahead of time. You can do part of the management as you're going forward. The transfer of assets, the younger generation really wants some assets to have part of the game in their, ownership, because if they just work for you, so you have to kind of do maybe both, but what you do, there's no exact answer either way. So the management, it's how much you feel comfortable sharing. I would encourage you to start process and give them a chance to make some decisions on the farm management. What that includes for you is what you're comfortable with. Is I can't tell you that. The assets can be a different process, different timeline, but again, having to make some decisions, what hybrids to plant, what chemicals to use, all those different things can help them feel more confident in the process. All right. All right, any more questions? Like I said, I'll hang out here for a couple more minutes, at least till 11. And if you have questions, you're welcome to post them. I'll try to give you feedback. All right, well, you're welcome to ask questions. Again, there's still a few of you online. So if anybody has some personal questions, they can do whatever they want. I'm very comfortable with.